Minister of Foreign Affairs and East Africa Cooperation Ambassador Samuel Shalukindo said the region must not be complacent despite overall stability. He called for stronger collaboration among member states to tackle the conflict in eastern DRC, which continues to displace civilians and destabilize regional peace efforts. Shalukindo also warned of a surge in transnational crimes, including arms smuggling, human trafficking, and cybercrime, urging coordinated intelligence sharing and reinforcement strategy.
The International Court of Justice is set to make a historic ruling on the member states' responsibilities in combating the scourge of climate change. The island nation of Vanuatu in the Pacific Islands says the World Court is the only international jurisdiction with general competence over the area of international law, which could provide an answer in this regard. Climate change remains a contentious issue, especially after one of the leading economies in the world, the United States, pulled out of the 2015 Paris Agreement on climate change. South Africa is currently seeking to promote green energy as one of the effective ways in tackling the global challenge. Kailihle Kumalo reports.
The International Court of Justice, which is the central organ of the United Nations, authorized the International Union for Conservation Nature to participate in the advisory proceedings on the obligations of the states regarding climate change. The World Court's 15 judges will count on strands of environmental law when they deliver their findings at the Peace Palace in The Hague, Netherlands, this afternoon. Some of the questions the ICJ will seek to address include the key responsibilities of countries to protect the globe from the effects of climate change and reduce the emissions of greenhouse gases. They'll also tackle the issue of legal consequences for those states who fail to comply.
Lastly, the Kremlin says the Russian delegation is on its way to Istanbul for negotiations with Ukraine. The talks have been planned for several weeks, but until now, Russia had not confirmed whether it would take part. The BBC's Vitaly Shevchenko explains.
It's the same delegations, really, the same demands. Ukraine is looking for a ceasefire and a meeting between Volodymyr Zelensky and Vladimir Putin. Russia is saying it's too early for any of that. Instead, they want to talk about the memorandum that Russia presented to Ukraine during the previous round of talks. And that memorandum is essentially a demand for surrender, which Ukraine is not going to accept at this stage.
Recapping on your top stories, the UN says at the end of this month it will be forced to suspend emergency food aid for more than 1 million people in northeast Nigeria due to a lack of funding. The World Food Programme says this is happening at a time of high record levels of hunger in the country. Channel Africa News, I'm Onele Ntsintsi.
SABC News. The African Perspective.
And coming up in your sports news this hour, SAFA Johannesburg president says football authorities must resolve development failures and pay solidarity fees owed to amateur football teams, while Leeds United have signed Germany midfielder Anton Stark on a 4-year contract. Details at 4:30.
Connecting Africa to the world. Africa in Business with Thami Ngubeni brings you the latest insights on Africa's economy. Are you fluent in French, Chinyanja, Portuguese, and Kiswahili? Are you passionate about radio? And are you looking to work in South Africa? Do you have papers that qualify you to work in South Africa? In that case, we might have an opportunity for you to work for Channel Africa. Send us your CV and demo at newsroom@channelafrica.co.za. Remember, if you don't hear from us within 14 days, it means you have not made it or you have not been selected. Channel Africa, the African Perspective. Africa in Business on Channel Africa.
It is exactly 7 minutes after 4 p.m. Central African time. A very good afternoon to you, Africa. This is Africa in Business. A lot in store for you this afternoon. Just before 5 p.m., we'll be taking a look at the latest global and local market moves, as well as the drivers, and a trading update coming out of Sasol for the year ended 30th of June 2024, and also then Mr. Price releasing its Q1 financial year 2026 trading update this morning, taking a look at all of those market moves and also the financial situation of Malawi, the economic situation of the country, and recommendations coming out of discussions that were had between Malawi and the International Monetary Fund. We know that Malawi still continues to have very high inflation and very low growth rate as well. We'll look at the fiscal and debt dynamics that are recommended to be adjusted by the International Monetary Fund. Also, news coming out of Nigeria. The Senate has approved President Tinubu's plan for more than $21 billion worth of foreign borrowing. This in order to plug the shortfalls of the 2025 budget. This and a whole lot more coming up for you this afternoon on Africa in Business. Just a reminder that you're most welcome to interact with us and give us your story ideas as well and comments on the day's leading business stories on X, Instagram and YouTube. You'll find us at Channel Africa 1, and on Facebook we are at Channel Africa.
Stay ahead with Africa in Business, where Thami Ngubeni unpacks your go-to source for Africa's economic trends and development.
So this is the story that we've been carrying for you over the past few days regarding FlySafe Air. They've announced that South African Airways will accommodate FlySafe Air's passengers. This is amid the ongoing wage impasse. Lanseria Airport in Johannesburg reported 2 flight cancellations as FlySafe Air's pilot strike entered its second day. The airport's management says the airline has kept it up and its passengers have been informed about developments regarding the flight schedules. And just a reminder that the flights impacted are local and domestic flights within South Africa. So all of FlySafe Air's international routes remain operational. The trade union Solidarity has, however, rejected FlySafe Air's 5.7% wage offer and is demanding 10.5% for the 2025-2026 financial year. Naledi Ngobo has more.
Trade Union Solidarity and FlySafe Air are scheduled for a meeting with the Commission for Conciliation, Mediation and Arbitration on Wednesday. So far, 28 flights in total have been cancelled since 200 of the airline's pilots embarked on a strike this week. Lanseria executive Christian Fourie says FlySafe Air has kept an open line of communication.
Yes, we've had some impact yesterday especially. We had 3 flights cancelled, but FlySafe Air has kept us informed in the entire process. So they did advise us that there would be some flight cancellations. What happened is that at the last minute, though, some of their contingency plans didn't happen, and we had some passengers that arrived here that needed to be rebooked. Today we only have 2 cancellations, and that's out of 12 to 15 that we do daily with FlySafe Air. So they've kept us well informed throughout the process. We've been able to manage it, and actually it's only impacted really our Cape Town flights. Our Durban and George destinations have not been impacted at all.
Lanseria International Airport CEO Rampa Rammopo says over 20% of their commercial passenger services are not operating due to the strike and will ultimately affect the airport's bottom line as FlySafe Air is the only airline operator from Lanseria.
It will definitely impact our bottom line. And SAFE, as you said, is the only airline operator from Lanseria. We do 30 flights out of the number of flights that they operate countrywide, and at the moment we're talking between 20 and 30% of our commercial air passenger services that's not operating, which is a big chunk of our business. Definitely going to have an impact. We probably will make a decision by the end of the week depending on what goes on and the results or the outcome of the discussions.
In a notice to passengers, FlySafe Air said SAA would operate 2 flights between Durban and Cape Town throughout the week until Sunday. FlySafe Air passengers affected by the changes have been advised to check in at SAA counters. I'm Naledi Ngobo in Johannesburg.
African enterprise meets global opportunity. Africa in Business on Channel Africa.
It is exactly 12 minutes after 4 p.m. Central African time as we turn our focus now to Malawi and its economic situation and positioning. The International Monetary Fund Executive Board says there is a need for decisive and urgent policy action, this to stabilize the economy of Malawi. The IMF made these comments following its consultation with the Southern African country. The Monetary Fund says Malawi continues to face significant macroeconomic challenges, and these include unsustainable fiscal and It's also stressed that the need for fiscal consolidation focused on domestic revenue generation is essential to reduce inflationary pressures and also to improve debt sustainability. For more on this, we joined this afternoon on the line by Chifi Mhango, Chief Economist at Dawn Consultancy Group. Good to have you with us once again, Chifi. Welcome.
Good afternoon, Thami, and good afternoon to all your listeners across the continent.
So, Chifi, we've been reporting on the macroeconomic challenges that Malawi faces, the unsustainable fiscal and debt dynamics, the critical foreign exchange shortage, among other things that the IMF has flagged as well. Where can the Malawian government start in addressing these challenges? Because there are long-standing challenges in many instances.
Well, I think it has been a prolonged situation in terms of how the economic environment has been in Malawi. I mean, you are talking of a country which is on a size of the economy of about 11.6 billion in 2024, obviously projected to grow to 14.8 billion in 2025 by 2.4%. So you are doing it as a very small economy. So be that the case, I think the challenges are quite massive in terms of the both political as well as the economic environment in Malawi. You must remember that on the 14th of May 2025, the IMF actually cancelled its extended credit facility to Malawi, citing a number of issues. Amongst them, I think key to that was actually also on the political side, to which the IMF actually indicated that they would rather wait for the election to happen in Malawi in September for them to start now looking at negotiating with the new government. So I think the concerns are more around the fiscal management of the economy from the current government of the Malawi Congress Party.
And what is the urgent policy action that's required from Malawi's side, and the type of reforms that are needed that would foster sustained and inclusive growth? Those are clearly critical for improving the conditions for Malawians.
I think the first thing that should happen in Malawi is more the political will to implement policies. The second thing would be more around merit-based appointment in terms of government position. And the third point would be about borrowing for productive side of the economy, but also in terms of investment in infrastructure such as roads, ICT, railway infrastructure, energy and water infrastructure. The fourth part will be about diversifying the GDP composition of the Malawi economy. It's heavily reliant on agriculture, which is unsustainable if you look at the patterns of weather, because most of the agriculture in Malawi is rain-fed. So diversification of the GDP composition of Malawi towards for sectors like mining, where there's heavy potential in terms of for minerals in Malawi, could be one area which the country can actually be focusing on. But also alignment of the fiscal, monetary and trade and industrial policy environment. I think we have seen challenges in terms of how the fiscal regime is, looking at the trade and industrial policy regime where, for example, the country is actually importing more than actually exporting. So the trade deficit issues actually becomes a challenging part in terms of the revenue-based generation from the point of view of forex into the economy of Malawi. But also, I think there has to be way in terms of improving the human capital development, especially amongst the youth, who are the majority of the population in Malawi. But I think the key element, which is the seventh point I would actually recommend, is to say enhanced institutional capacity, especially focusing on governance issues, because the corruption, I think, is one of the key issues that even the IMF is actually also highlighting as a key area of focus for Malawi.
Let's take a look at inflation now. In February of 2024, it was sitting at around 31%. And in May of 2025, it was still high, but slightly down at 27.7%. What would you say are the practical monetary tools that the Reserve Bank can implement in order to bring inflation down?
Unfortunately, if you look at the economic environment in Malawi, it is in such a way that even the monetary policy itself has got not much impact in terms of bringing down the food prices or even the cost of living in Malawi. Because what transpires that there is a less, the majority of people in Malawi are unbanked. So, which means the monetary policy environment is only focusing on a few people in terms of the monetary policy flow. most of the items in Malawi are imported. So which means that you're actually getting in imported inflation into the economy. So that you also have a limited impact in terms of reducing that inflation. But also, you see, the other element is about the extended environment in Malawi, where it's actually managed by the parallel market rather than by the official market. The official market is around, if you talk about US dollar, it's about 1,750 to Malawi kwacha, $1. But if you look at the parallel market, you see that the currency in terms of US dollars even goes as far as 4,000 Malawi kwacha. So that actually puts a bit of instability in terms of how the monetary policy actually is more effective in terms of dealing with the issues of high inflation in the country. So those kind of situations actually put a strain in terms of the effectiveness of monetary policy in the Malawian economy.
There's also the issue, Chiefy, of public debt. And the IMF directors have urged the Malawian authorities to take decisive steps as far as restoring this. By the end of 2024, public debt was sitting at around 88% of GDP.
Yes.
And looking at interest payments, that's nearing around 7% of GDP.
Yes.
What are the medium-term debt strategies that can be put in place that could restore debt sustainability in the country?
I think the first important thing is to enter into negotiations with regard to the structuring of that debt. But I think the key element that needs to want to look at is that what is the country utilizing that debt for? That is where there has to be now the structuring of the budget composition in Malawi in terms of how expenditure is actually done. So what you find that from the expenditure patterns point of view, you find that 80% of the expenditure of the budget in Malawi is towards administrative cost. So which means that if one look at those line of items around the kind of expenditure that Malawi is actually focusing on, obviously there has to be room in terms of restructuring that element. The wage bill from the government perspective is quite high. What you also find that, for example, what we can call the equivalent of DG positions in South Africa here, which is called principal secretaries in Malawi, you find that there's many of them holding those kind of positions in one ministry, which can some of the jobs can actually even be done by one person. So that actually causes a ballooning effect in terms of the wage bill in Malawi. So there has to be element of restructuring to ensure that government expenditure is managed towards more developmental expenditure, because currently developmental expenditure in Malawi is only about 20% of the current expenditure of government. So those are the items I think that need to be looked at in terms of restructuring the expenditure pattern in Malawi. So if you do that, obviously it might actually even lessen the burden of the country always trying to borrow for construction expenditure, which is all more on the administrative side of the economy. So I think that is where the ball game is actually being lost in terms of how the economy of Malawi is being managed.
And as you said, Chief Mhango, it's all around the implementation and that being key to the turnaround of the economic situation in Malawi. Thank you very much for your insight once again.
Thank you very much, Thami.
Thank you. That's Chief Mhango, Chief Economist at the Dawn Consultancy Group. I mean, one thing about Malawi is it's still very much dependent on foreign aid and the support that comes out of the International Monetary Fund. So that's the backdrop and some of the outcomes that came out of the consultation between Malawi and the IMF. It's 22 minutes after 4 p.m.
Gender-based violence is destroying lives and tearing communities apart. It happens in homes, in schools, at workplaces, and too often in silence. But it doesn't have to continue. If you see it, speak out. If you are hurting, reach out. Because doing nothing is not an option. Listen to all 19 SABC radio stations from Wednesday, 23rd of July for hard talk, discussions, advice, dramas, educational shows, and interviews around GBV with experts, survivors, lawmakers, and the whole country affected by gender-based violence. For all your favorite SABC radio stations, call 0800 428 428 to report abuse or get help. GBV, it ends with you. This message is brought to you by the SABC. Africa in Business on Channel Africa.
It is exactly 23 minutes after 4 p.m. Central African time. We turn our focus now to Nigeria, where the Senate in the country has now approved President Tinubu's plan for more than $21 billion worth of foreign borrowing, and this is to plug the shortfalls in the 2025 budget. The approved plan includes loans of 4 billion euros and 15 billion yen, a $25 million grant, as well as domestic borrowing through the government bonds. The money is earmarked for infrastructure, healthcare, education, security, and housing. For more on this, we joined on the line by Dennis O'Shea, certified financial modeling and valuation analyst and geopolitics content creator. A very good afternoon to you. Welcome to Africa in Business.
Hello, Thami. Thank you for having me again.
So let's take a look at these loans. How much do we actually know about them? Do you have details perhaps on what the terms of these loans are, the interest rates, for example, the repayment period? If you could, in a nutshell, summarize what the terms are for us.
Okay, so situations like this in Africa are supposed to trigger a lot of concern because we've seen situations like this reoccurring over and over again, but also you must check the size of each economy. And in this situation, Nigeria has a major sizable economy to be able to accommodate this. But the issue that we're facing is not the accommodation. The issue is the repayment of this those loans. And so, according to what we have here, they said the loans are long-term loans, some within the tenors ranging from 20 to 35 years. They're strictly tied to capital and human development projects. So looking at that, they're not shunted. The lowest that I can see in the different agreements is a 6-year long-term loan, which I believe the country over the period of that time should be able to handle. Though the amount looks quite striking, but it's something that the size of the economy can handle.
When you look at by the end of 2024, Nigeria's total public debt stock reached around 51.3% of GDP. Have the calculations been made as yet with this added, foreign borrowing, what that would then escalate to?
So there was a recent payment of loan that was made, if I'm very correct, it should be in May. Nigeria paid off IMF loans of $3.4 billion. Those were loans that came during the COVID pandemic period, and those were emergency loans that were paid off. The only thing remaining on that loan is the accrued interest, which the government have said is going to be paid off before the year runs out or into the next year. So that has been offset by itself. So that is already reducing the stress on the loan burden that is coming into the country. So, but also look at what these loans are going to be made for. They were outrightly put out that these loans are for servicing major infrastructural transformations. And if you've gone to major cities within Nigeria, especially within Lagos, Abuja, and Port Harcourt, you will notice that there are major infrastructural transformations that are already taken off on ground. That is already evident. Okay, so we give the President Tinubu that. Let's just give him that in the space of a few years to see will these loans go towards those infrastructural economical transformation projects. Yes, that's what we're waiting for. So beyond just the servicing, we're looking now at the transformation. Yeah.
So we have seen several African countries defaulting on the loans that they've made. But as you pointed out, just in the month of May, Nigeria did make a sizable, contribution towards their IMF loan. But if you look at the country's economy, it's quite vulnerable to currency fluctuations and also the oil price volatility. Might these factors in some way perhaps impact the debt servicing?
Yes, I agree 100%. So that is the major risk shock that this debt servicing are going to face. And I'm going to break that down to you. when the price of oil a few years ago was super high, nations like Saudi Arabia had what they call the excess foreign reserves that they invested in football clubs in Europe. They invested in airports, in Heathrow airports. The UAE has that sovereign wealth fund invested in those areas. So they diversified oil gains. That was where African countries that have oil, that's where they made a mistake. They were supposed to have foreign reserves that's supposed to be falling back on now. And in the case of Nigeria, sorry to say, we just spent those monies without thinking about the future where oil prices would be low. And we are in that future right now. The oil prices are not doing so well. So that's a major risk that Nigeria is going to face, and several other countries like Angola too, are dependent on their oil reserves for borrowing. As you know, we have those recent. Yes, we also have a recent one with Aramco. Nigeria is trying to go into a loan deal with Aramco, Saudi Aramco, but it's not going through because the oil prices are not looking good. So that is still a pending transaction. So those are examples of situations that could be a major financial risk for Nigeria at the moment.
Dennis, as we round up this afternoon, you were quite deliberate in highlighting where and how this money was going to be spent. Infrastructure development being one of them. And we know that infrastructure development is one of the areas that is supposed to, if applied the way it should be applied, lead then to economic growth. What do you believe needs to be done differently this time round? Because it's loan after loan after loan. What needs to be done differently this time round to ensure that this $21 billion worth of loans actually leads to economic growth for Nigeria?
You know, the truth is that we just need to tell ourselves the truth. Not only Nigerian, but African countries, the same story, different resources, different conditions, but the same story. You move from the SADC to West Africa to the Sahel, the same story to North Africa, the same story. Egypt is having its own story also. So I'm going to say this. African leaders need to tell themselves the truth, sit with the economists, and sit with financial institutions, the central bank, and project realistically every quarter, every half of the year, every year, every quarter, every half of the year, every year, and monitor the overspending. There is too much overspending in government. Cut that down. If you can cut that down and you push a lot into education, into infrastructure development, into AI, into IT, into technology. Africa has the youngest population that is already a resource by itself. If you invest into that population in 2, 3, 4 years, you can see the explosion in success. So there is so much possibility, but the leaders must tell themselves the truth. And the stakeholders of finance, business, and economics within our African nations, especially in the nation of Nigeria, must be realistic to themselves. They must stop telling themselves the lies.
Dennis O'Shea, thank you very much for your insight as well as your analysis of the situation and where this $21 billion is going to go. So it's not really all about the money, but it's really about the structure. It's about the political will of actually being able to have a vision for your country and stick to that. We thank you for your time. Dennis O'Shea is a certified, thank you, sir. He's a certified financial modeling and valuation analyst and geopolitics content creator. He takes us to exactly 4:30 p.m. Central African time, standing by for your latest market indicators. Here is Buntle Hetbush.
Business News on Channel Africa. The African Perspective.
Thanks, Thami. Good afternoon. And our final look at the financial indicators this afternoon. $1 is trading at 17 Rand 59 in South Africa. In Botswana, it's trading at 13 Pula 43. In Namibia, it's at 17 Namibian dollars 59. The Zambian kwacha is trading at 23 kwacha and 3. In Kenya, the dollar is trading at 128 shilling 34. In Ethiopia, at 138 birr and 4, Uganda 3,563 shilling, and in Tanzania it's at 2,601 shilling. $1 in Nigeria is trading at 1,529 naira. In Egypt, the dollar is trading at 49 Egyptian pound and 9. In Tunisia, it's trading at 2 dinar 88, Algeria 129 dinar 29. In Morocco, the dollar will cost you 8 dirham 90. In Angola, the dollar is trading at 912 kwanza, while the Congolese franc is trading at 2,866 to the US dollar. And now for a look at the commodities. Gold is trading at $3,419 per ounce at this hour, and platinum at $1,448 per ounce, while Brent crude oil is at $68.17 a barrel. And those are your indicators. For any business stories you'd like to share with us, please send an email to newsroom@channelafrica.co.za or call us on +27 11 714 4459. For Channel Africa Business, I am Bontle Hetbush.
Business news on Channel Africa. The African perspective.
And for the business of sport this afternoon, here is Musibudi Makura.
Sports on Channel Africa. The African perspective.
Thank you so much, Thami. A very good afternoon from the sports desk. Now, the South African Football Association Johannesburg President Phil Mogodi says football authorities in the country must resolve development failures and also pay solidarity fees that are owed to amateur football clubs. Now, Mogodi, who is also the owner of ABC Motsepe League side Dube Continentals, says urgent clarity and action is required. Now, these fees, known as training compensation as well as solidarity contributions, are intended to reward clubs that invest time as well as resources into developing young football players.
The competition committee of SAFA, because players are registered through the competition, and the technical officer must come up, and also the legal of SAFA, legal and constitution of SAFA. They have to look at these matters. And also PSL, which is NSL, and they must come on board because there's that joint election committee that deals with these matters. That matter must be raised there. And also they're able to say, how much is that? Because when you say 10%, what is this percent of what? It's important that it must be clarified and whatever.
Meanwhile, grassroots clubs as well as academies are raising the alarm money lost due to professional football clubs failing to pay mandated fees to players they helped develop. Now, Mogodi says, though a legal as well as constitutional standing committee at SAFA, this ambiguity and needs to be clarified so that amateur clubs can get what is due to them when transferring players to professional clubs.
Yeah, that's what I'm saying, that within our system, from professional, from regional, when a player gets promoted, the region must be able to tell their teams to say, when you get this, that's what you get. When they go provincial to ABC Motsepe, when a player gets promoted to another, when a player gets professional contract, what is that you have to benefit? What are the benefits? But that's why it needs to be outlined properly. But you've got standing committees at SAFA. That means the standing committees are not doing their work. So remember, if you appoint a standing legal and constitutional, they have to look at those matters because they come from FIFA and CAF.
Meanwhile, academies like School of Excellence as well as the Remember Elite Sports Academy produce a number of players for professional clubs but continuously complain about not being compensated, something Mogodi says needs to change.
No, that's what I'm saying, that if you look at the blood that come from School of Excellence, Resa, I know Resa. I know what's happening there. They are paying coaches, they are working hard to make sure that everybody benefit of that. But they are not benefiting. Also, the teams in the location, They get the players. You've got Mtutuzi, Chabalala, we've got Villagas, they come from Soweto. So that's why I said SAFA must come on board and have a synergy between SAFA and PSL, because the clearance come from SAFA. So before the clearance, release the clearance to PSL team.
Onto this now, Leeds United have signed Germany midfielder Anton Stach from TSG Hoffenheim on a 4-year contract. The Premier League having confirmed the news earlier this week as they continue to strengthen the squad for their return to top-flight football. Now, British media reported that the transfer fee was around $23.5 million. The 26-year-old, who was also has two international caps for Germany, showing Hoffenheim in 2023, scoring 4 goals and registering 6 assists in the process. And finally, in tennis news, the ongoing Mubadala City DC Open in Washington, D.C. will offer $2.3 million in prize money to ATP players for the 2025 edition. Now, the singles champion, by the way, will walk away with about $420,000, and the winning doubles team will split $148,000 each, as the prize monies were released earlier on today. At 16:38 p.m. Central African Time, it concludes your sports news this afternoon on Channel Africa. For any sports stories you'd like to share with us, our email address is newsroom@channelafrica.co.za, or call us on +27 11714 4459. For Channel Africa Sport, I am Mosibudi Makura.
Sports on Channel Africa. The African perspective. Connecting Africa to the world. Africa in Business with Thami Ngubeni brings you the latest insights on Africa's economy.
It is exactly 4:39 Central African Time. Thank you to Musibudi Makura and Buntle Hertbush. Still coming up just before 5 p.m. this afternoon, actually at 10 minutes to 5, we'll be taking a look at the latest global and local market movements and drivers. We'll be joined by Lindile Malchas, investment strategist at Absa Investment. But before that, we begin here with a focus on South Africa's debt management. South African-based debt management company Debtbusters' 4th annual money stress tracker report shows that though South Africans are less worried about money in 2025, this is in comparison to the past 2 years, the impact of financial anxiety does remain substantial among South Africans, with the middle class still under severe financial pressure. Around 70% of respondents to the survey, which was conducted in April, said that they were financially stressed. Mabu Boloka spoke to Benay Sega, executive head at Debtbusters, a debt management company.
Yeah, it is very concerning. As you would know, we have done the money stress tracker for 4 years now. This is our 4th installment. And we track how people are feeling towards their finances, as well as the stress that this brings in additional parts of their life over the last 4 years. So 70% of the people said that they were feeling anxious or stressed financially. Of those, 90% said that this was spilling into their home life. So I think the danger for us is that the levels are very elevated, and it's also affecting everything else that we do in life. Having said that, we are pleased to see that the 70% respondents who said they were financially stressed or anxious, that's a little bit lower than previous year. Last year it was 75%. So we note the positive movement in that, but we still believe the levels are very elevated, and most of the respondents, as you say, form the backbone of our economy. So I think we should all be a bit concerned about the outcome of the survey results.
And this 70%, it's mostly middle-income earners. And considering that they're seen as the backbone of the economy, with them losing spending power, what does that mean for the economy of the country?
Yeah, I think this is a very difficult question to answer in one go, but I will try. I think it's our economy is very sophisticated and it's very complex. And I think the reality is that South Africans have been under a lot of financial pressure since 2015, 2016. So today, when we look at the result, it's just an outcome of over a decade of really a high inflation. Interest rates have also been high for periods of that time. But I think the most difficult part has been that the income growth for our consumers has not really kept up with inflation growth. And I think that's where the economy focus should be. We need more jobs, we need more working people, and we need those who are working to be able to earn more to make sure that all of us are uplifted. And I think that's kind of where we find ourselves. Now, of course, if you earn more, we spend more, and that's a good thing for the economy. I think what we worry of is that much of the spending seems to happen on credit, and I think it's probably important for everyone listening to this to know how much of their take-home pay they're spending on repaying credit. And we said that if that's more than 30%, one should really take a harder look at whether you really need that credit or not. So I think there's some lessons to be learned for the health of our economy and to put it on a sustainable basis.
And about 37% of the respondents are also trying to cut back on their monthly spending and also just try and save something. What are the prospects of success? I mean, will they be able to do that given that most of them have high levels of debt that they have to deal with?
Yeah, I think it's difficult. I do appreciate that, as you say, a large percentage of the survey respondents are trying to do things on their own. I think that's great, and we should all be taking note of that. I think when you are pressed for whether you have to repay back your debt or you have to put food on the table, to buy something nice for yourself, that's when the decisions become really, really, really difficult. So I think life, we have to take some short-term decisions. We have to take some long-term decisions. We should try to cater for all of them. Now, if you do find yourself in a difficult spot there, I think practically probably three things that you can think about. The first one is if you are paying too much of your take-home pay towards debt, like we said, more than 30%, definitely talk to a debt counselor to get your debt repayments restructured. If you are having too much, that's the first thing. The second thing is if you find yourself in a situation where your other expenses are very high, look for opportunities to either bundle your expenses with other people's spending, to buy in bulk, or, use cashback programs, or sometimes, don't buy the things that you need. I would say that. The third thing is if you are really short of income, really pressed for income, there I think there are different ways to think about it. Some of the respondents said that they are looking for better paying opportunities, but many of them are also doing stuff on the side, either selling items or trading items or trying to monetize something online. I think there are lots of opportunities. So I would urge our listeners to think in those three categories, and maybe there's some tips for them.
You also find that when you were doing the survey that some South Africans are reluctant to seek out debt counseling, debt reviews. Why is it important for them whenever you find yourself dealing with unsustainable levels of debt, you should seek out that professional help?
Yeah, I think it's far easier for a licensed individual like a debt counselor. I'm a debt counselor myself. It's far easier for a licensed individual to negotiate lower debt repayments or better terms or stretch out how long you have. If you are over indebted, it's far easier for them to do it on your behalf for all your creditors than as a consumer for you to do on your own. I think that's the reason to seek out help. But like we said, if your credit debt repayments are more than 30% of your take-home pay, definitely seek help. But if they're not at those levels, chances are debt counseling is probably not the solution for you. So you need to look for alternative measures. And I think I would urge everyone to do a bit of reading and educate themselves to see what other options are available.
That was Benay Sega, Executive Head at Debt Busters, speaking to Channel Africa's Mabo Buloka, taking us to exactly 4:46.
Africa means business. Tune into Africa in Business with Thami Ngubeni for the future of the African economy. Channel Africa, the African perspective.
Now, a debate on the state of financing the African Union has taken place at the 5th ordinary sitting of the 6th Parliament of the Pan-African Parliament in Johannesburg, South Africa. The session's debates reflected a shared commitment to strengthen the PAP's financial and oversight capacities. The AU's financial budget is made up of contributions from member states as well as funding from international partners and external donors. Ndlandla Mahlangu reports.
The African Union depends on external donors for about 70% of its funding. George Orina, chairperson of the Subcommittee on General Supervision and Coordination on Budgetary, Financial and Administrative Matters, presented a crucial report on the state of financing of the Union, addressing the financial strategies and challenges for sustainable Union growth. The session heard that the 2025 budget for the AU, adopted during the 45th Ordinary Session of the Executive Council held in Accra, Ghana in July 2024, was just over $608 million. Orina says the budget is not enough.
A clear indicator of the state of affairs is the fact that the AU budget for 2026 financial year is approximately 10% of the budget that was approved for the year 2020. Excellencies, members of this House, I will repeat that the budget of the AU for 2026 is 10% lower than the budget that was approved in 2020. Member states have directly been assessed only 220 million for 2026. The assessment in 2020 was 220 million. If we take all factors into consideration, including inflation alone, it will be self-evident that we are still dealing with an austerity budget.
The Pan-African Parliament relies on the AU and external donors for funding. Tony Sibanze from Eswatini urged the President of the Parliament, Chief Fortune Charumbira, and PEP members to actively advocate for stronger financial commitments from national parliaments.
As much as we appreciate the 650 because it enabled us to have this session, we are still sitting with a budget gap, Your Excellency. So please, I stand to request you, because you've demonstrated that you really want to support this Pan-African Parliament, that when we file our supplementary budget, ordinary supplementary budget, which is coming in the next few months, please lobby on our behalf, your fellow colleagues, to assist the Pan-African Parliament to get this adequate funding so that our missions and the Bureau can be able to do its function. But we have a concern, mainly in the Finance Committee, that the AU budget calendar does not coincide well with the Pan-African Parliament calendar for statutory meetings. Remember that the budget starts with the Finance Committee, and the Finance Committee discusses with the Bureau, and it is tabled at the plenary. So if there is no plenary, it will be a challenge for it to be sent to the African Union because it must be approved by the plenary. So you find that that calendar does not coincide, and most of the time we find that we miss out because of that. If you can maybe assist us to clarify how best we can align that.
Kenyan parliamentarian Denson Mungatana says PEP should be independent and adequately resourced to fulfill its mandate, advocating for a buffer fund to assist financially constrained countries in meeting their commitments.
Given the circumstances that are difficult within the main budget of AU, we have constantly raised the issue that we want to go out and look for money to directly fund our activities as Pan-African Parliament. And then we are informed that even if we raise money, first of all, it is not encouraged. But even if we raise the money cannot be handled by the Pan-African Parliament itself. The money must be taken to AU headquarters. Why is this the case? If we take the chance and the effort to go and look for money, why can't this parliament be allowed to function independently so that we can support our programs without having to go to the African Union headquarters?
The debate highlighted the importance of independence and transparency. Reporting for Channel Africa, I am Ntlanhla Mahlangu in Johannesburg.
Africa in Business on Channel Africa.
It is exactly 4:51 Central African time as we turn our focus now to a look at global and market movements. And for this analysis, we're joined by Lindile Malchas, investment strategist at Absa Investments. Good to have you with us on African Business. Good afternoon.
Good afternoon, Thami.
So perhaps let's start with unpacking the latest performance of both the global and local markets, and let's take a look at the drivers as well.
Yes, so we are seeing global equities staying the green today. So European, UK, the Nikkei 225, as well as Chinese stocks, those are trading higher. When we look at our local markets, the local equities are trading higher, so that is being driven by a rebound in industrials and financials, whilst you are seeing resources, those giving back some of the gains that we saw from the previous day. And then looking at currency, the rand is slightly flat today, so trading around 17 rand 56. And then some of the commodities, you are seeing a marginal drop in some of the commodities across the board. So gold, platinum, and oil down so far. And that also reading in through some of the resources underperformance.
Let's take a look at some company news. Sasol Limited, they issued a trading update for the year ending 30th of June. It's 2024, right? What were the key takeaways from the updates?
Yeah, so with Sasol, still think that the business continues to try to navigate a very tough operating environment, but we are seeing some positivity within that trading statement. So they expect the earnings per share to increase by more than 20% this year, and that's compared to the prior year where they had recorded a loss. And then you are seeing from an operational point of view, they are saying that they expect to meet most of the guidance targets from a volume basis. And then we did see a development from some of the minority stakeholders in a project at Natref. They are undergoing business rescue, so markets did digest some of these news negatively, and we did see the share ending the day about 6% lower.
And taking a look at Mr. Price, they've released their Q1 financial year FY26 trading update this morning. What is it that stood out for you?
Yeah, so in our view, we still think that the company is still well positioned within the retailer segment. So seeing our sales grow by about 6%, comparable sales, which look at the existing store growth, that growing about 3%. Company did post that they continue to gain market share within the various segments that they are operating in. But then from a margin perspective, they did see lower margins on the back of more promotion activity, but quite positive in what we're seeing from some of the segments. So the apparel had a very strong run within April and May, and that being led mainly by Mr. Price Sport, Power Fashion, and My Ladies. Homeware, that continues to post strong performance, so sales are up by mid-single digits. And then telecoms, that experiencing even greater growth, up by double digits. And then in terms of the management outlook, company still expects the conditions locally and globally to remain disruptive on the back of tariffs as well as higher inflation, but they continue to expect to gain market share as well. So quite a good set of results.
And what are the economic releases that the markets are expecting this week?
Yeah, so today we saw South African inflation that coming in line with what markets are anticipated. So ticking up slightly to about 3% from a prior print that was around 2.8%. And then looking at some of the global releases, you are expecting flash purchasing manager indices across the various regions, so the UK, Europe, and the US. And then from a monetary policy point of view, you are expecting the European Central Bank to make the interest rate decision on Thursday.
I wonder, Lindile, have you been focusing on Apple recently? I know a lot of the movements with Apple have been in the United States, with Donald Trump wanting them to move a bulk of their manufacturing, to the United States instead of India, which is what they'd been planning to do. I don't know if you've been looking at those stocks and if perhaps they've been, impacting from the domestic side.
Yes, so I think the key drivers within Apple, and it is a share that we hold in our global equity portfolio, are the key regions that we tend to look at is within the Chinese market. They've been coming under significant pressure from a Chinese perspective, where there are quite competitive offerings from a pricing point of view and technology point of view, if you're looking at some of the smartphones there. And then when you're looking at markets that are a bit more mature, so developing markets and Europe, you are seeing that the consumer has been under a bit of pressure, so that affecting our sales as well. But what continues to be strong within the business and continues to drive the cash flow has been the services business, where they are getting a recurring cash flow from those consumers in terms of upgrades and some of the customer care. So that has been the strong point. But ultimately, if you do see an improvement within global economic growth and ultimately an improvement in consumer spending, I think that should lift discretionary spend for phones.
Awesome. Thank you very much, Lindy Lemalchas, for today's global and local markets update. We thank you for your time.
Thanks.
Thank you.
Cheers.
That's Lindy Lemalchas, investment strategist at Absa Investment. That brings us to exactly 4:58 Central African time, and that's how we come to the end of Africa in Business for this afternoon. Just a quick recap of the stories that we brought for you. We did take a look at developments in Nigeria, with the Senate approving a $21 billion foreign borrowing. This to plug shortfalls in the 2025 budget, and also after discussions and consultations with Malawi, the International Monetary Fund recommending there a number of things that will help turn the economy of Malawi around. Thank you so much to our entire team from the news desk, Gonele Nzinzi, economics desk, from the sporting fraternity, Mosiburi Makura, and from production, our producer, Mabo Buloka, technical producer, Ndando Lutuli, and on social media, Nomalanga Butelezi. I am Thami Ngubeni. This has been Africa in Business on Channel Africa. We hand the reins over now to Vous d'Afrique and the French desk. Have a good one further.